We're delighted to have you at the Nardone seminar series, this one focusing on the Adani controversy, which, as I'm sure all of you know who have signed up for this, has been in the news, not just in India, but even worldwide. It created quite a stir, and I'm delighted today that we have the opportunity to explore this with two experts coming at it from two different but very important perspectives. We have Ashish Chugh, who is a seasoned investor, has managed large portfolios focused on the emerging markets. He started out as an engineer and then worked in industry for a few years before getting his MBA from Harvard Business School, and then has been managing portfolios of stocks in the emerging markets, which is what he does now for Loomis Sales. So he is really used to looking at companies in depth and identifying the ones with long-term investment potential. And then we have my colleague, Professor Ganesh Krishnamoorthy, making his first appearance at a CEM event. And he is a professor of accounting. He got his accounting degree from USC, Southern California. He's also trained as a chartered accountant, what we call in India a chartered accountant, and in the US a CPA. And he's qualified on that front in both countries. He worked in industry and as I think for an audit firm in both India and outside India, including the US. And his research focuses quite appropriately, given our topic, on corporate governance, audit quality, and internal auditing. So I think we have two terrific panelists. Without further ado, I want us to dive right in because we only have an hour to explore this very important topic. And I'm going to ask Ashish if we could just get us started by telling us what were the main charges that Hindenburg research leveled against the Adani Group a few weeks back.
Sure. So first, thank you, Ravi, for having me, and thanks to the audience for giving their time. Really appreciate it. So I think important to maybe step back and first discuss who is Hindenburg before we go into the allegations. So Hindenburg actually is a very seasoned and credible short-selling firm in the United States. And there's a cottage industry in the US of firms that basically are involved in purely short selling. They don't go long. They essentially do a lot of deep research into companies to essentially find frauds and basically make a bet against those companies. So Hindenburg is a credible short seller, and you can see that from the strong track record that they've built over the years in short selling. Their allegations are backed by deep research and not just words. And you have to understand that in the short selling industry, it is extremely important to have that credibility because you're essentially sticking your neck out. And if you're wrong, then not only will you lose a lot of money, but you essentially lose your credibility. So it's sort of that proverbial boy who cried wolf. No one will listen to you ever again if you're consistently wrong. Also, there are legal issues related to short selling, to sort of, to essentially shout fire in a crowded theater. And you better have a lot of evidence backing you before you go ahead and make very big allegations against a company. And Hindenburg has, made allegations successfully in the past against companies like Nikola, which was found to be a fraud, which is a very popular electric vehicle company, and many others in the United States, but also in China. So we have to take what Hindenburg says very seriously because it's backed by a lot of research. So what were the allegations that they made? These were very scathing allegations, and these were very broad allegations. They were very damning allegations. So they accused the company of fraud. They accused the company of manipulating their stock and basically doing it consistently, not just a one-off, but practicing stock manipulation over a long period of time. They accused the company of blatantly lying on their financial statements. They accused the company of corruption, of bribing government officials. They accused the company of essentially accounting fraud. They accused the company of cooking the books in many ways by round-tripping revenue, essentially making up revenue, by inflating revenues. And they accused the company of having all these shell companies outside India in places, tax havens like Mauritius and some other places like the Caribbean. And because of these shell companies, they were able to do all these fraudulent things. They were able to manipulate the stock. They were able to show revenue and sort of essentially create revenue from one company to another into the publicly listed companies. So it was, I think, very broad-based allegations that they have, something that even one of them would be damning for a publicly listed company. But the scope, the depth of allegations was just tremendous. And so it's something that I think needs to be taken seriously. So that's in a nutshell what the allegations were.
Yeah, thank you, Ashish. That was quite a litany of charges. I think the question is how the company responded. I want to turn to Ganesh. If you could just help us understand. The company issued a very long, I think, 400-page response within days of the accusations. What did they say in their defense, and what do you think of their defense?
So first of all, I want to add my thanks, Ravi, for inviting me to this panel, and I think Ashish did a wonderful job of sort of summarizing the case against them that Hindenburg made. So let me turn to your question about the response. So as you said, it was a pretty long response, 413 pages to be specific, and I actually read every word of it. Before you start thinking, this guy should get a life. I didn't. I was just kidding. I did read, of course, the more important parts, especially as it related to the financial reporting allegations and so forth. But in general, you know, the way I see it is that when anyone with the credibility of Hindenburg that Ashish just referred to accuses you of fraud, you want to defend yourself by doing three things. First, you want to be direct in your response. Second, I think you need to be transparent about directly taking on the allegations. And finally, perhaps the most important part, you need to be credible. Just as Hindenburg needed to be credible, your response has to be very credible. And so let me give you my brief thoughts on all those three areas. The first part is whether they were direct. And, you know, one of the things that struck me the most is, of course, and I was not alone, that on page 1, they actually pivoted to two things. One was ginning up nationalism, essentially saying that this was a calculated attack on India, right? And the second is basically they turned around and accused the accuser, basically saying that Hindenburg is a short seller who has no altruistic motives. They're not supposed to have altruistic motives. They're in it to make a buck, and so both of those seemed very much like my daughter when she was young. When I caught her, I said, "Why didn't you do your homework?" Well, you're asking me you're unfair. You're asking me an unfair question. So it basically can turn it around and essentially turn it over to the other side. Now, in fairness to Adani, there were actually more direct responses than I think Hindenburg acknowledged. When I read the report, I said, some of these did take the questions directly. Let me take to the next one. Were they transparent? This is where I think it gets really murky, because their response of 413 pages had a lot of regulatory filings, court documents which were publicly available, and importantly, a lot of irrelevant information. So let me give you an example of that. So in response to many of the questions, they talked about all of the good that they are doing with the helping women being self-reliant or become entrepreneurs. Now, that, to the best of my knowledge, has little to do with any of the allegations that they were making. So, just in terms of being transparent, it wasn't clear that they could have done what I felt was they could have done a better job. And now the credibility part, which is the third part. Whenever you have a 400-page document, the first thing that comes to your mind is, what are they trying to hide in a 400-page document? This is the old classic attorney kind of trick, where you give the opposing attorney 10,000 documents if all that the opposing attorney needs is just one paragraph and one page. And it's somewhat felt like that. And I think the other thing that I think was really, in many instances, it didn't really pass the smell test. What do I mean by that? So some things, for example, let me give you one example. There are scores of others that, as I was reading, that came to my mind. Was one of the things they refuted was that Vinod Adani, who is the brother of Gautam Adani, the CEO, was not a related party. Well, if you're a brother, by definition, you're related, right? They were trying to essentially parse the legal definition of related party, and they may in fact be right, but that doesn't really look good when you essentially claim that your brother is not a related party in a transaction. So those kinds of things, I think they were trying to either hide, and there are several other examples. So collectively, I think the Adani response muddied the water even more. And in some sense, it may have actually given more oxygen to the Hindenburg allegations. So my overall answer to your question, Ravi, is that I would give them, now putting on my professor hat, I probably give them a C or a C- on their response. And going by what the market's grade is, it's probably an F, given that it cost them more than $100 billion in market cap.
Well, Ganesh, when students complain that you're a tough grader, I understand now what they mean.
Actually, I was an easy grader here because the market probably had given them an F in this case.
Okay. Stepping back a little bit, here's a question I'd like to pose to both of you, and that is, were there any red flags that we should have picked up earlier before the crisis actually unfolded? Ashish, really quickly, and then Ganesh, quickly. Thank you.
Sure. So I think, there was more than red flags. There was barbed wire with electricity running through it. I mean, I think this company, basically, it was clear that investors should avoid it. And there's a long track record and history of why they should avoid it. And so to me, it was a surprise that the Hindenburg report was a surprise, because there was a long history, a track record of what this company had done over many years. And I'll talk about that in a bit. But even outside of that, just, if you look at some common sense things that don't require any sort of deep research or diligence, were big red flags. So for instance, this is the second largest conglomerate in India, yet hardly any Indian mutual funds own the company. I mean, just think about that. There's hundreds of billions of dollars in money in Indian public equity funds, but hardly anyone owns the company. The second largest conglomerate in the country, and it is not followed at all by investment banks or sell side. Essentially, when you're that big, sell side analysts, investment banks sort of are tripping all over themselves to cover you, to do research on you, because that generates fees on the investment banking side and other sides. And a conglomerate like this would generate a lot of fees, but no one wanted to touch it. That's essentially the takeaway. And India is a very, very overbroked market. There's dozens and dozens of sell-side firms, of investment banks that do research on companies. So even in this crowded market, no one wanted to touch Adani. And so why was that? These people knew obviously something that perhaps foreign investors didn't. And what they knew wasn't a secret. In fact, it was an open secret. So Adani has a long track record of being investigated by the authorities. It has a long track record of being found guilty by the authorities such as the Ministry of Finance, the Directorate of Revenue Intelligence, essentially the CBI, which is the FBI of India. Again and again and again, this company has been found to be involved in money laundering, involved in cooking the books, involved in corruption, involved in bribery, involved in fraud, and they've been convicted. Now, even though they have been convicted, the sentences have often been withdrawn, or they have been just given slaps on the wrist. And I think that what has emboldened them to do all the things that they've been able to do. And then outside of this, the other sort of big red flag that anyone can see is the fact that their stock was up 8 times, 800% in 3 years. That is remarkable for a company that's doing very sort of old economy, slow growth stuff such as infrastructure. If this was a hot tech company in AI, okay, you can say that's probably why it's up. But the fact that this stock was up 8x in 3 years, the fact that the leader of the company became the second richest person in the world in 3 years. It took Jeff Bezos 20 years, and he built something really big to become the richest person in the world. I mean, these were, some of these were red flags, but a lot of these were, like I said, barbed wire with electricity running through it. They had 5 CFOs in 8 years. That in and of itself is a big red flag. They were being audited, and I think the professor might go into this, by basically a no-name shop with audit partners who were 23, 24, 28 years old. They were found to be guilty of stock manipulation with Ketan Parekh, who is one of the most notorious stock manipulators in Indian history. So there was so much. That's why the Indian public equity investors, the institutional investors, avoided them. That's why the sell side has avoided them. And essentially, I think what happened was this report by Hindenburg basically shed light, because they had done the deep research. They had the evidence, independent third-party evidence that caused the reaction that it did in the stocks of the Adani Group, even though many of these things about them, the bad stuff, was known about them for not just a short period of time, but a very long period of time. So maybe Professor, you can add on to that.
Yeah, Ganesh, your take.
Yes, please call me Ganesh. So I'll focus on the accounting and financial reporting piece that I think Ashish certainly touched on. And there were for sure some clear red flags there. So let me start with, the corporate governance ecosystem within which all of financial reporting information is generated and then disseminated and consumed. And essentially the financial reporting game is a fairly straightforward one. It starts with the management. The buck stops with the management. These financial reports are assertions of the management who run the business. And the question here was whether there were incentives for the management to engage in earnings management or cooking the books and so forth. In fairness, every company's management has those incentives, right? Some of the incentives that were brought up, high leverage, Sure, this company may have been more highly levered than normal, even in comparison to other infrastructure companies. The pressure to meet, street expectations because the stock was trading at 300x. Those were, I think, yes, risk factors, but I don't see them as any risk factors that are different from perhaps other companies. Heightened level for sure. But I think the two things that make the risk factors even more so here were, one, the complex nature of the entities themselves. Each one of these entities has, hundreds of subsidiaries, shell companies, and thousands of related party transactions. So this really adds a layer of complexity. And on top of that, you layer the fact that this is a family-owned conglomerate, okay, with the obvious desire to exercise a lot of control. Now, that's a recipe for a lot of financial reporting issues. So the next question that comes up is, well, who is going to keep them honest? Because you really want to make sure that in such a situation, you have a lot of checks and balances. And normally these checks and balances come in the form of, internal audit function, internal controls, the board, the regulators, investors, and in fact, short sellers as well, who in some ways, are check on the management. But I'm going to focus on two in the interest of time. One, external auditors, the independent auditors that Ashish alluded to. Now, what's very sort of, in some sense, alarming here is that, as Ashish mentioned, it is a small, I would say an ultra small firm with 15 folks in there. And the lead partner, engagement partner, is 28 years old. Okay. Now, neither one of those things are unlawful. It's not unlawful to have a small firm. It's not unlawful for a 28-year-old to sign off on the audit report. But what this really, the audit quality, the red flags in audit quality come down to three things. These three things apply to every audit. One, you want the auditor to be independent of the management, because they're a check on the management. You want them to be independent. You want them to be competent, experts in being able to understand the business and provide assurance. Third, you want to make sure that they have put in enough effort. Okay. So quickly about independence. Well, if you are a firm, audit firm, whose almost all of your revenues are coming from this one client, you're not economically independent. It's a huge pressure on the firm to comply, to be very compliant with the management. So that's a really big red flag. In terms of competence, I mean, this is about as complex as it gets in terms of this Adani Enterprises. And it isn't clear that the 28-year-old, nothing against 28-year-olds, but has the expertise. And finally, this is something that hasn't really gotten either in the Hindenburg report or other places. I dug a little bit deeper on any evidence of how much audit effort got into it, right? Put into it. Now, long story short, they charged $70,000 for this audit. When Adani Ports, which is a smaller company audited by a Big Four, Deloitte, charged $400,000. Now, to the extent that audit fees is a proxy for effort, that ought to tell us something. Okay. One final piece on this. The other part of people who have to keep a check, provide oversight, is the audit committee of the board. Now, remember, this is the independent committee of the board, neutral party whose sole job is to look over the management and the auditor. Okay. So they need to be independent and do their job. That's the second part. Now, were they independent? Well, it's hard to tell. On paper, they were, but until 2021, Raj Adani, who was the brother of Gautam Adani, again, was serving on the audit committee of the board. Unheard of. In US companies, in all of my research, that's a very strange kind of a audit committee composition. And finally, were they doing their job? Well, part of their job is to hire the most competent auditor they can find. Why would they go and find the smallest firm possible, which had the least amount of independence, when in fact, other companies in the Adani Group have indeed hired Big Four auditors? That was totally perplexing to me. Okay, a big red flag. Now, you put all this in the context of the management having incentives, the auditors, audit qualities being suspect, and really the audit committee potentially, sleep at the wheels. That gives you a real pause and cause for concern. And I can go on, but in the interest of time, I will stop.
Thank you, Ganesh and Ashish. Stepping back now to look at somewhat the larger picture, what do you think will be the implications of this for the Adani Group and for all the projects that they are undertaking? We know that they have a very important role in helping to build the infrastructure in India, which is vital for India's growth and given the growth aspirations as they are. So how do you think this is going to affect the group going forward? Ashish?
Yeah, so I think, the market has spoken. So if you look at first, the fact that they had to pull their public offering. So Adani Group was in the middle of raising money when this report came out. And despite, the fact that they had a long list of very big backers, people who had committed to the offering, and that it was clear that the offering was going to go on, it was actually pulled. Now, we don't know exactly why it was pulled, but it could be that the investors backed out. It could be that the regulator said, no way, because we don't want, people investing when there's serious allegations. It could be that there was political pressure. I don't know. But essentially, I think that's a big tell that they weren't able to raise all that money. It was $2.5 billion that they were trying to raise. And what was also interesting, again, just going back to the red flags, there was not a single global investment bank involved in that offering, even though they were raising money outside of India. It was all small, local brokerages and investment banks. I've never seen that. When you have such a big offering from such a big conglomerate, you have, Goldman Sachs, Morgan Stanley, but it's clear they didn't want to touch it. So first is the market has spoken. They weren't able to raise money, and then look at what has happened to the stock. So the stock has, they've lost hundreds of billions of dollars in market cap. I think, it will be tough for them to raise money. So if you look at, for instance, one of the largest sovereign wealth funds, Norway's sovereign wealth fund, they pulled their investment. They had invested in Adani, both in I believe the equity and the bonds, and they sold their investment. And many institutional investors are selling, especially because now there's a very strong focus on ESG, and it's the G that is that just isn't there. And so investors outside India don't want to have anything to do with it. I do think, there's always going to be people, who are going to who are going to basically have the other side, take the other side of the conversation, of the argument. And we've seen recently, there was one large investor who actually bought Adani stock recently, almost $1 billion worth. So, they'll have their own reasons. But I think for the most part, given the scathing allegations, I think the institutional investor backing of this company will be very thin, if at all. Also, however, at the same time, I think given the fact that Adani Group has done a great job in stonewalling investigations, in avoiding the implications of all they have done over the last 2-3 decades, they've just been pretty much slapped on the wrist. I don't think such a report will make them lose their power, and I don't think such a report will make them change their ways, because this is their modus operandi. This is how they operate. So they're not getting capital from the local mutual fund investors. I think in foreign investors, they won't either. But I do believe, they're going to continue to do what they do. They have been trying to convince foreign investors by going on these roadshows, and also by retiring some of their debt to sort of show that they're sort of mending their ways. But I think it would be honestly foolish to think that they can change their colors. So I think for Adani Group, I don't think it's going to go away or anything like that. But I do think so. They've been outed in a big way, and it's going to make people very sort of cautious in dealing with them.
Ganesh?
Yeah, I think Ashish covered a lot of ground there, and I think did it great job. So let me just focus on a couple of things that I think he mentioned, but I want to emphasize. So the first most obvious thing seems to me that is going to happen, and maybe it's already happening, is the impact on the cost of capital. Anytime you have these huge uncertainties, risks, both financial reporting and otherwise, it's going to have to get reflected in the cost of capital. Now, I don't know what the terms are of these sovereign wealth fund investments and GQG partner investments and so forth, but I suspect this is ultimately going to show up in terms of higher costs to Adani. The other aspect of this that I think is important is I think there is going to be generally a higher level of skepticism on everything that Adani does from this point forward, which seems to be an obvious point. But I think parts of that is already showing up. Now, there is a customer, Bangladesh Power Development, that apparently is actually wanting to renegotiate their deal that's already been done. They're coming back and saying, hey, I don't know what that all has to do with the allegations, but they just want a piece of the action here because they see that they smell blood. And finally, as Ashish pointed out, I think there's going to be a whole lot more scrutiny on the governance, on the financial reporting side, but also on the transparency side. And this is going to be something that Adani will have to live with for quite a long time, and perhaps even other family-owned and other businesses in India. One last thing I will say, and then I'll stop, is that I don't think the group itself is going away. And the major reason, and again, I'm not an expert on this, but they have so much of a footprint and they are so entrenched in the Indian infrastructure that it's hard to imagine anybody else stepping in to fill that void at this time. So it's almost a mutually assured, I won't say destruction, but mutually assured existence that I think India will have to live with, given the amount of footprint that this company has.
Okay, I think I want to dive into some of the questions from the audience, and then we can circle back and revisit some of the issues that you've raised. I'm going to invite the audience. If you have any questions, please post them on chat, as some of you have already done. So we start with the first question from Ravi Chittor. And I'm going to ask you very quick, like 1 minute, 30-second responses so we can get through as many questions as possible. Is in India, compared to many other emerging economies, actually has in this area of finance and stock markets, a better infrastructure of higher quality with more transparency, more disclosure, and more effective regulation than many other emerging markets. Of course, if you use the benchmark as the developed countries, then you could argue that there are many shortcomings. So the question being asked is it a surprise that this happened in India, that with such a large Indian company making global news? Either of you care to respond?
Sure, I can give my response from sort of investor's perspective. So it's not a surprise because I think frauds are a part and parcel of any economy of any stock market. So I think it can be developing or developed. So India certainly has had its fair share. Nothing, I think, at the scale of Adani. But certainly there have been, you might recall, Satyam was a big one. Satyam was this very well-regarded tech company in India. And there was fraud going on there because essentially the promoter owned a private company and a public company, and there was money being moved from the public to the private. But outside of India, China has numerous frauds. I mean, frauds are perennial in stock markets. Recently, Brazil had a big one, Americanas. But again, it's not limited to emerging. If you look at the US, I mean, you don't have to look that far back. Look at FTX. The guy was on the cover of every major magazine, and every major Silicon Valley investor had invested in this company. And you also don't have to look that far. Look at Europe. Look at Wirecard. That was a fraud that went on for many, many years. And it was uncovered by the FT. And what happened there was the regulator actually enabled the fraud by trying to silence the people who were speaking out about the fraud. So it's not a surprise. Frauds happen everywhere. Frauds happen all the time. They're a part and parcel of stock markets. They're a part and parcel of businesses. The fraudsters are usually one step ahead of the regulators, and that they're just smarter than the regulators. So I don't think this is a surprise, and this is not the last time. We'll be talking about another major fraud. But what happens is, the stock market moves on. It's not that India becomes uninvestable, just like US did not become uninvestable after Madoff or Enron or WorldCom. This is sort of just people move on, stock markets move on, and there'll be another one, and then we'll be talking about that.
Yeah. Thank you, Ganesh.
I think, again, I concur with Ashish. I think when you get down to the details, when I started to dig deeper, it doesn't seem like a surprise that something like this should occur. Let me give you a quick example of that. So when you look at, for example, the audit committee charter of the Adani, at least one of the companies, Adani Enterprises. Now, this charter looks very much like the model charter that is defined by regulators and other best practices. Now, that's the easy part, right? So you get when you start to define what your audit committee looks like, you basically go and cut and paste the audit committee charter. It should consist of from independent people and this and that and what have you. The devil is really, how do you put that in practice, right? So if you are somebody who can on paper be very independent, they have no relationship with you, but if they are operating in a culture where nobody can really speak up freely, if dissent is not just tolerated, but in fact squashed, you have the making of really issues that come up, as what we have seen in Adani. So it's one thing to have an institutional framework where, hey, everything looks good. And my own research, basically, I do a lot of work in Europe. I don't do that much in the emerging markets. But if you look at many of the countries around the world, after the Sarbanes-Oxley came up and all the regulations came up, many of their regulations and a lot of the framework looks very similar to what we put together in SOX. Not because America is better, but we have to deal with that crisis. And so when we dealt with that, a lot of people piggybacked on it. But even in the US, it isn't working as well as you expect, much less in emerging markets. So I think that would be my response to the question.
A point of clarification on short selling, Ashish, very quickly. There's a question about, are there short sellers in India who could have done this, or is that not possible?
No, it's short. The short selling industry in India is really non-existent because short selling is very tough in India. The only way you can do it is through futures. You can't actually do it like you do in the US by borrowing stock. You do it in the futures market, and that, there is liquidity, but not as much to make the market very broad and deep. What Hindenburg did is they shorted the bonds that traded outside India. And also, I believe they traded the futures that trade outside India. And so obviously, this would not have come out by a short seller in India because that industry really doesn't exist.
Doesn't exist. Got it. Yeah, there's another question on whether Adani's close relationship with the government, with Prime Minister Modi and so on, may have had any impact on how the company conducted itself or the response thereafter. A very quick response, either of you, if you would have any thoughts on that. I know this is may not be in your area of expertise.
I'll give it a shot. I don't know if directly it had, but what my own sense of this, when I step back and think about, all of this was in broad daylight. All of what I'm talking about was all available to investors, like, for example, the financial reporting issue that I dug deeper into. So where was everybody? Why didn't anybody catch all of this, and why wasn't? And I think part of it is that I think people, and Ashish probably can speak to this, is that people are already aware of the connections, the political connections, and the fact that they can probably get a free pass with the regulators. So in some sense, the investors were actually primed for this. So as soon as the Hindenburg report hit, it confirmed probably what they already knew. And that's the reason why we are seeing such a dramatic contraction in their market cap. As we are seeing, and it is having a hard time, even though it's recovered a little bit, it's having a hard time really recovering from this shock. That's just my 2 cents. Right?
Yeah, I think, there's no sort of proof, right, of the political connectedness, but what you see again and again and again is the agencies doing their job, the Directorate of Revenue Intelligence, the CBI, the Enforcement Directorate, on and on and on. The courts doing their job over the last many, many years of finding Adani Enterprises and other sister companies guilty of so many things, of money laundering, of faking invoices, of stock manipulation. Not just any stock manipulation, but in conjunction with Ketan Parekh, who's like one of the most notorious stock manipulators in the country. And using shell companies to basically manipulate the stock, using shell companies to manipulate the accounts, the transfer of revenue, related party transactions, on and on and on. I mean, all that information is public. And this group of companies has been found guilty by all these agencies and the courts. However, what happens is repeatedly they get away with it. Repeatedly, either investigations or the convictions get overturned, or they are reduced. They get small petty fines. They get slaps on the wrist. And you've seen, in fact, a ex-Supreme Court judge who was responsible for one investigation resigned in protest. There have been other such instances where people have resigned in protest, very senior people, because they uncovered all this damning evidence and found the company guilty, but it was overturned somehow or the other. And so, that where there's smoke, there's fire. What that leads you to believe is there's certainly, they're pulling strings somewhere. And for them to become so big and so do it so brazenly, basically bank robbery in open daylight, shows that, they basically are protected. And for him to become the richest person in 3 years in the world, not just in India, for the stock to go up 8x, for them to be so brazen to raise money knowing that underneath there's a big sham, I think shows that they can do this with impunity. So there's obviously no direct connection, but you can sort of where there's smoke, you can sort of see the fire also.
A quick question on valuation. At the moment, the stock has fallen, I think, to about a fourth of what it was at its peak. Is that look like a more realistic valuation? Or if this is something you haven't explored, we can skip the question.
No, in my case, I would say that, for me, the value of such a company is zero. So you can look at valuation very theoretically and academically, but there's no way you can put any credibility on the numbers. I mean, how are you valuing this company? Whether you use multiples or DCF, or you're relying on numbers that they provide you. But those numbers are all made up. And so for me, you only get to that question once you say, okay, is this company something I would invest in? That personally, I would not be able to even, cross that bar to get to the bar of, okay, is the valuation appealing? For me, the valuation is zero, honestly.
Ganesh, any thoughts?
No, again, valuation is not in my wheelhouse, but one thing I will say is that I think until the uncertainty around a lot of these questions settles, I'm not sure anybody can really get a good handle on it. I mean, most of the valuation models are going to look for accounting numbers. For example, what Ashish was mentioning, what are going to be the earnings? What are the cash flows? And you can't trust those numbers. It's hard for me to imagine that the market will settle on something that we can put our hands on. I'm sure there are others like Ashwath Damodaran who have put out a number, but again, that's not my area of expertise. So I'll stop there.
Thank you. What does the controversy, the Adani controversy, tell us about governance in India and efforts to enhance it?
So I would say that it would be not prudent to paint everyone with the same brush. So certainly, there is Adani, but there are many, many very high quality companies in India with very strong corporate governance. So, we invest in emerging markets and we invest in a lot of high quality companies. And I can say, based on our research, the highest number of high quality companies we have found to be in India. And by high quality, one of the most important aspects is corporate governance. And so I would not, you look at this instance and paint everyone with the same brush. Corporate governance at this company, I would say, is pretty much non-existent. But that doesn't mean that corporate governance at other companies is non-existent. And I would say that in every economy, there are institutional deficiencies, right? So certainly it's more the case in emerging markets like India. So you basically, rely on the checks and balances like the auditors, the boards, the enforcement agencies, the courts, and so on, to check and balance and make sure that the company is treating minority shareholders well, that there's no conflicts of interest and no related party transactions, on and on and on. I would say that in the case of India, given the brazenness of what this group has done over a long period of time, that you can say that certainly the institutional deficiencies are higher here versus, say, in the US. So certainly frauds happen in the US, but once it's revealed, I don't think it takes a long time. It took a long time in Europe, but I think in the US, it takes a much shorter time for it to get resolved. So from that point of view, so what that means is, investors sort of buyer beware. You have to do your own deep diligence on companies. And this is why you can see the Indian mutual funds don't even own 1% the second largest company in the country, because their research, and I'm sure what's already known, has sort of made them avoid investing in this company.
Ganesh?
Yeah, I think that's a really interesting question as to what does it tell us about other companies. One of the first things I was watching when this thing unraveled after the Hindenburg report was whether there was a contagion effect, right? So because ultimately the markets are pretty good at saying, hey, what else could be the next target of either the Hindenburg research or something like that? And they want to get ahead of it, right? So I was sort of closely watching if there is a contagion effect. And again, I'm not an expert on markets or specific companies or groups in India, but it looks like it's been fairly contained. The markets really, Indian markets haven't really sort of sold off, wholesale. And even, other family-owned large businesses have not, their price doesn't seem to be sufficiently reflecting the same level of risk of something close to what Adani is going through. To me, I think the next, the jury is still out in some sense, because I want to see if there are other shoes to drop here. Because as we are looking at this, it wouldn't surprise me if there are other short sellers looking at other family-owned businesses and seeing if there is a way in which they could make a buck off of that. And I think the more the time that passes after this, I think there is going to be a higher level of comfort. But all in all, I think the one thing that the companies themselves can do all across, and to some extent all across the world, but more specifically in India at this point, is much of this governance improvements have to be voluntary. They have to get ahead of it. They have to get ahead of it through higher transparency, higher level of confidence, and Adani has to do it, but I would expect, and I think it would be good governance if other family-owned companies take a cue from this and say, hey, look, we are going to provide you, we're going to be more transparent. We're going to be giving you even stuff that you don't want right now in the interest of being transparent. So if something like this hits, the carnage is not what we see in the Adani Group.
Picking up on something Ashish said about how mutual funds in India probably are not holding significant positions in such a large company. But what about institutional investors like the LIC or state banks and so on? They have been exposed to some degree to the group. Any sense of how significant those risks are, or how much they were exposed to the Adani Group?
Not much. I think it wasn't the equity or the debt. It was the exposure that might be of concern is the loans by banks to the Adani Group. But even in that case, the loans are actually not, as a percentage of assets for each bank, not a big amount. And that sort of tells you, right? Like even the banks are avoiding this company. There wasn't, when you have such a big blow up in the stock of a company, usually there are ripple effects, there are domino effects, there's other shoes to fall. But, it's been, I think, more than 6 weeks since this has happened, but there haven't been other shoes that have fallen because people avoided this name, especially in India. Now, I'm sure there are some firms that have held bonds of the group and so on who have been institutional outside, but within India, it hasn't caused, I think, the blow-ups. Certainly, there has been a drift down in sentiment, but that's temporary. That always happens, and then it recovers. But there really haven't been any, broad consequences for the economy or investors or so on.
Ganesh, anything to add?
No, I I would take a pass on that. I think Ashish has summarized it well.
Okay, as we come towards the end, we got just about 3 or 4 minutes left. What good do you see this yielding for India? What good can come off of this?
I think it's great, to be honest, that this has happened because it shows the functioning of the market, of the free market, right? So you had a short sellers report that had damning evidence that then led to what it should lead to, which is the stock collapsing. You basically had the group being exposed. There's a saying, sunlight is the best disinfectant. That's really what has happened here, is this group is being disinfected, essentially. I don't know if it's going to work completely, but certainly I think the fact that sunlight has shone on this group will continue to help investors avoid, certainly domestically, but also now internationally. And this is, a great reason why short selling is great, why short sellers are great, because they essentially are in this business of creating a free market. For every buyer, there's a seller. For every long, there should be a short. And in this case, the short case is 100% valid. So this basically is proving that the Indian market is working well, that the stock did fall. It wasn't being able to be manipulated when essentially the truth came out, that it didn't cause, this was a stress test, right? This was a stress test on the Indian market. And yes, it fell for a few days, but then it recovered. And and what it proved, as I was saying earlier, there weren't any sort of collateral damage. There might have been short term with sentiment, but over the medium long term, there hasn't been. And so this stress test actually has proven that the system is not fragile. It has proven that it is strong. It has proven that it can withstand. And it has sort of worked in doing what it's supposed to do, which is really putting the company in its place. It shouldn't have been a stock that should have been trading at this level. And I highly doubt it's going to go back to that level anytime soon.
Thank you. Ganesh, final thoughts?
Yes. Are you able to hear me? The image froze for some reason. I don't know if it happened to everybody or not. Yes, I think I completely concur with Ashish that I think Indian markets will come out stronger. And whenever you have these kinds of shocks, I think these are very moments to learn from. Interestingly, a lot of the issues that came out in the Hindenburg report and since then aren't things that should be new issues. I mean, there wasn't these red flags were there. And I think we know from experience in the US and other countries, including emerging markets, how to deal with them. Now that what we need is the will and determination to fix the things that need fixing. I think that's what makes developed markets developed, is not that these failures don't occur, but when these failures occur, they are revealed promptly and then they are addressed promptly. And that's what distinguishes, in my mind, a developed market from a developing market. And if India has to go on the path of from being a developing market to a developed one, I think this is a good test of how quickly they recover from this, what they do about it, and on all fronts, the regulators, the businesses themselves, what kind of lessons they learn from it. And I think in some ways it's a blessing that it happened when the markets were actually pretty high. There's a nice saying by Warren Buffett that you only find out who is swimming naked when the tide goes out. right? So, when the bear markets come, the tide is going to go out, and there's going to be a lot more people swimming naked. And before that happens, I think if companies and others who are currently swimming naked can fix it, then I think we'll all be in a better place. So that'll be I think we are out of time, so I'll stop there.
Thank you, Ganesh, and thank you, Ashish. This has been fascinating and very illuminating. Thank you for sharing your insights with us and fielding some of the questions. I want to just mention before we wrap up that we have another speaker scheduled for Thursday as part of the Vivek and Vandana Sharma India lecture series, and that is the president of Honeywell, speaking about the strategy of Honeywell in the emerging markets and how they're using the emerging markets really to innovate and develop products not just for the emerging markets, but even for the rest of the world. So it should be a very interesting session. He has been described as a made in India CEO. He was really spent a good part of his career in Honeywell in India and has now risen to the very senior position in the firm. So that should be a very interesting session. Catherine has posted on chat the link for you to register, or you can even find it on the center's website. So we look forward to seeing many of you at that event. I want to thank the audience for joining us today in numbers, great numbers. And again, thanks Ashish and Ganesh for a delightful session. Thank you all. Goodbye. See you at our future events.